Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's January 26th here. We got a little bit of data to go over today, so we'll jump right into it. Next week, however, will be a lot of data. So if you really like the seesaw week we've had, you'll probably even like next week. So it'll be interesting to see if we get the same effect next week. A lot of data, including jobs numbers on Friday of next week. So as we close out the month next week and start the new month. So let's kind of jump right into it. We'll start with the GDP for the fourth quarter. So previous quarter, back in November, we had 3.2%. Forecast for fourth quarter was supposed to be 3%, and it came in disappointing at 2.6%. Now, remember, this is the first initial reading of it. We'll have two more with the final coming in March. So come in February, we'll have another revision of this in March. So we could have this change a little bit at times, but that was a little disappointing. But inside the numbers, we're seeing consumer spending up, which is good news. So there were some good things actually in there, but I think a lot of people are, the stock market them are going to be shrugging this off because they think with the tax cuts and everything else, you're going to see and the good corporate earnings that you're going to see a lot of people kind of shrugging that off and thinking it's things are going to get better. The economy is going to be still strong. Now, we also got durable goods orders, which we had back in November, a pretty strong number at 1.7%. It was supposed to be a little tamer in December at 0.9%, the forecast, but it came in at a lot hotter number at 2.9%, which is obviously great news. Now, we also got core capital, where we strip out the big ticket items here, and we had a 0.2% growth in November, but it came in at a little disappointing at 0.3%. So, but the big numbers that we're looking at, of course, are the GDP and durable goods orders on this number here. So durable goods, obviously great numbers. GDP, a little disappointing, but with headline news, as you can see, Q4 earnings, it's boosting stocks up there. We also had some comments made by Treasurer Nunchin sorry, I think I misspelled his name there, Nunchin, saying something about the weak dollar that I think that got misinterpreted, saying that it's good to have a weaker dollar, and I think a lot of our counterparts around the world weren't too thrilled about that. So President Trump came out, basically said, basically it was misinterpreted. It's not so much that a stronger dollar is better, but I think it was more in the short term, a weaker dollar is not that bad because it'll help out the national corporations with the exports. So in short term, it may not be so bad, but long term, of course, they want the stronger dollar. So we had a lot of fluctuations with the 10-year Treasury as a result of that, and of course, affected also the bond market and stocks. So we had a little improvement in bond market yesterday, and then yields kind of shrunk up there because the weaker dollar is not so good. Of course, on the global level, they want to see a stronger dollar here, and we don't want to get into a currency war with other countries as well. So looking ahead here, we got the bond market. Bond market's not looking so good. So we rebounded quite a bit. As you saw, we were way down here, way below this floor of support. We rallied a bit. We were up. I think we closed up around 17 basis points from where we left off on Wednesday. But today we started lower. We're up higher, but we since have gone down. We're not quite at the lows where we were of the session, but right now we're still down about 22 basis points, which is still hanging just below this first floor of support here. Hopefully we can break above that and continue this trend. We don't want to be stuck below floor of support, which will become overhead resistance for us and kind of push us down further. So again, rates are a little higher today with a price change for a lot of investors. Lenders did a price change already so far this morning for worse pricing today. All right, so let's go ahead and look at the 10-year Treasury. As you see, the 10-year Treasury, we closed below the first level of resistance yesterday, and then since we've been pushing up, we're up about the 2.65 level. We did push up against the second level resistance. We're hoping, we've been kind of steady here, but a lot of seesaws, pretty wide reaction. Most of the time we get maybe 1 or 2 basis points, but we've been getting some pretty wide swings, anywhere between 3 to 4 basis points in the Treasuries here even. So again, rates a little higher today. Hopefully we'll get a little more improvement as the day goes on. It's what we've been kind of seeing. It's not where you start, it's where you finish. So we'll kind of see what time we'll say when we get there. But as we wrap this up, I hope you guys have a great weekend here. And if you guys want to get more data, just come over to Twitter. You can find me on Twitter, and my handle is Mike Bjork, and I do post throughout the day, including the market close and such. Again, thanks so much for watching. I look forward to see you guys on Monday. Bye-bye.